Next, we'll discuss the formation of a partnership. This is when two or more people, they get together, they say, hey, let's form a partnership. They each have to maybe put in money or different assets into the business to get it going. And they'll have to do journal entries for this. The first step is that each partner will invest assets at agreed upon value, basically the fair market value of what the assets are worth. For example, maybe if I had a business and someone I knew also had a business and we wanted to combine both of our sole proprietorships into one partnership, we might be bringing over our assets that we already have on our books into this new partnership. If something was worth a specific dollar amount on my books, it does not mean that same value is carrying over to the partnership. All assets going into the partnership will be reassessed for the fair market value. Also, each partner will have their own journal entry that you're doing. We are not combining all the partners into one journal entry. Each one will be done separate. Assets have a debit balance. Therefore, the new journal entry will have all assets listed with a debit balance. This is the journal entry for the partnership. If the partnership is getting all these assets, then they will be debits. For example, I just listed all the assets here in parentheses to show you would put the name of the asset in. If I contributed cash or a building and equipment and some accounts receivable I had, I would list them all right here. All of the assets you list as a debit because that's its normal balance. I could also carry over some liabilities. For instance, if I put a building into the business, there'll be an asset for building, but I might have a mortgage on that building. Therefore, that liability will also carry over. If I carried over accounts receivable, I might have allowance for doubtful accounts, all of the bad debts I think I will have. That also normally has a credit balance. Anything you're bringing to the business, into the new partnership, you want to keep it as the normal balance. If it's an asset, it'll have a debit balance. If it's a liability, it will have a credit balance. The last step is to total all this up. You want to total it up to see the value of this investment from the partner. Assets will increase the value of the investment and liabilities will decrease the value of the investment. Some partners might not even contribute liabilities to the business, therefore it would only be the total of all the assets. Basically, you want to add up the assets but subtract anything on the credit side. That would give us the partner's capital. You would use your last name. If it was me, it would be Kroger, capital, and the value of my investment. We need to keep all of the different partners separated to know what the value of each of their investments are. I would do this journal entry for each partner that we have.